Hello everyone, welcome back. In this video we will discuss about double entry system of accounting, types of accounts, golden rules of accounting and source documents of accounting. Let us start with double entry system of accounting first. Technically, accounting started in 640 AD. The first double entry was used in 1340s by Messrs, an Italian treasurer. Later in 1494, Luca Pacioli published his book on double entry system. He was a mathematician. Every business transaction has twofold effect, wherein two accounts are affected in opposite directions. Thus, if a complete records were to be made of each such transaction, it is necessary to debit one account and credit another account. Recording of this twofold effect of every transaction is called the double entry system of accounting. As explained in the dual aspect concept, every financial transaction has two aspects, one where the business receives a benefit and the other where it provides the benefit. Therefore, every transaction should be recorded in such a way that its effect is reflected in two places in the business book. The receiving aspect is termed as debit aspect and the giving aspect is termed as credit aspect. Therefore, every business transaction will have an effect of two accounts, one on debit, one on credit side. According to double entry system, each transaction affects at least two accounts in terms of equal debits and equal credit. Types of account. An account is a statement of transaction relating to one of the two aspects of the business transaction. Based on the aspect being recorded, an account can be debited or credited. Accounts are classified based on the three categories of business transaction: transaction involving individuals or other business entities, transaction involving assets, goods and cash, transaction involving income, expenses, losses and gains. In effect, there are three types of accounts maintained for the transaction. Personal account. It consists of individuals or groups of individuals. Example, Mr. Karthik, individual account; Canara Bank, institution account; Gopal and Shyam, partnership firm, etc. Number 2. Real account. These are accounts relating to property or assets and cash belonging to a business concern. Example is land and building assets, cash in hand asset, purchase, goodwill, etc. Nominal account. These are accounts relating to income, expenses, losses and gains of the business concern. Example, salary account is an expense, discount allowed is a loss, discount received is an income. Golden rule of accounting. Debit what comes in, credit what goes out. This is the real account rule. Debit what comes in. If something is coming in, debit its account. If something is going out, credit its account. If it's its real account. Debit the receiver, credit the giver. This is your personal account rule. If the person is there and if he is receiving, we will debit his name, and if he is giving, then we will credit his name. Debit all expenses and losses and credit all incomes and gain. This is nominal account rule. So if it's an expense like salary, discount allowed, it will be debited. And if it is income or gain like income received due to commission, rent and all, it will be credited. Source documents for accounting. Number 1. Bill or invoice. It is used for credit sale. When a trader sells goods to a buyer on credit, agreeing to a delayed payment by the buyer, he provides a sales invoice with the details of the name and address of the buyer, the name of goods, the amount, terms of payments, etc. Cash memo. It's for cash sales. When goods are sold for cash, the seller issues a cash memo to the purchaser. The cash memo contains details of quantity of goods sold, rate per unit of goods sold, and total value of the goods sold. Check issued by a buyer and it becomes a source document. Check issued by a buyer becomes a source document for recording transaction in the books of accounts of both the buyer and the seller. Credit note. A credit note is recorded by the seller when the goods sold by him are returned to him by the buyer. It contains details of the goods returned, the buyer's details and the amount involved. A credit note is even used by the banking sector. The credit note is issued to the account holder when a certain amount is credited in his account. A credit note is also used to increase the value of the previous invoice sent by the supplier, and the credit note will be issued by customer to the supplier. Debit note. A debit note is recorded by the buyer when goods purchased by them are returned to the seller. It contains details of the goods being returned, the seller's details, and the amount involved. A debit note is also recorded to adjust an underbilled invoice. Debit note is issued by the supplier to the customer. Receipt. A trader receipt. A trader issues a receipt to a buyer when payment is in the form of cash. It contains detail of date, amount, cash received, and buyer's detail. Voucher. Vouchers are prepared by the accountant and signed by the designated person in the organization, and they contain detailed information regarding the payee, monetary value of the payment, a description of the transaction, and more. Thank you.